Today, I'm going to teach you how to buy this without draining your 401k, selling your stocks, or taking a loan from the bank. Now, I know that might sound crazy, but there is a wealth strategy that has been in existence for generations that is hidden inside of an account that about 50% of people actually own, and that's life insurance. Hi, if you don't know me, my name is Amanda Ryba. I have been a financial consultant for the past 9 years, and I have been producing educational content here on social media for the past 3, teaching money tips used by the rich. And today, I'm going to teach you how to use your life insurance policy to become your own bank and borrow against it to buy a house. But first, we have to break down the type of policy that we're talking about here. We're not talking term insurance that only pays out when you die. I'm specifically talking about permanent life insurance, such as whole life or index universal life, where you have the ability to borrow against the cash value that accrues inside those plans. When your policy has accrued enough cash value, you can request out a policy loan without a credit check, bank approval, or income verification. The insurance company gives you a loan against your cash value used as collateral, so your policy will stay intact, your death benefit doesn't disappear, and in many cases, you can actually still earn interest even though you've borrowed money out of the policy. Now, you may be thinking that this sounds too good to be true, but it's not. It's just too good to be free. The insurance companies are actually going to charge you an interest rate to borrow the money out, somewhere around 5% or less. But let's be real, people, where are you getting a 5% loan at these days? Especially with no credit check. Okay, so here's how it works. Let's say you have built up $100,000 in cash value inside your policy. This could happen relatively pretty quickly, or this could take maybe 5 to 10 years. It just depends on how fast you fund your plan. So now let's say you want to borrow out $75,000 as the down payment on your home. You can do that. No traditional loan application, no ding to your credit. And the best part is you choose the repayment terms and you pay it back on your own terms. Want to pay the loan off in 3 years, 5 years, 10 years, or never? Totally up to you. Just remember that any unpaid balance will reduce your death benefit and affect your policy's cash value growth over time. So I definitely recommend that you treat the loan like a real loan with the intent to pay it off at some point. This strategy is one of the ways wealthy families have used life insurance, not just for protection, but for opportunity. It gives you the liquidity when you need it without worrying about taxes, penalties, or stock market volatility. This strategy is called leverage. Instead of draining your investments, borrow against your cash value and let your policy continue to go to work for you, earning more interest. If you'd like to learn more about these policies and how potentially you could become your own family bank, I have linked 2 videos here right here that you can click on to learn a little bit more about how these strategies work, and make sure that you subscribe so you don't miss another video teaching you what the wealthy elite do with their money. See you back here next week on YouTube.